This is the Bitcoin live show. I am here with the Minotaur team. We are back from a big break. I was in Europe, traveling everywhere for conferences and other meetings. So we kind of had maybe just one event while I was away. But the intention is to go back on a regular basis and keep going, keep doing this analysis because a lot of people were asking me where, in particular, where is Marcos and his liquidity analysis. So we are back. Um, okay, so we can start looking at the charts, and let me show you this chart that is the most common chart, the simplest possible charts, because we're kind of going back to basics. Okay, so there are many charts that people use. I'm seeing the power law becoming more and more popular nowadays because almost everything else failed, and the power law is still going. And so I have few observations. First of all, okay, I call this simple power law chart. It's the simplest possible chart. Later we can, other times we can look at more complicated charts. But let me close this one. Okay. All right. And it has the main power law. And I know that people use stuff that they found online. I will discourage people. I mean, even if it is good when other people are trying to replicate the results, but some of these charts are not really, they say, the official one. This is pretty official, and it's a simple one. It features the main power law, that is this red line, and then it has this lower line that is what we call the support. You can calculate the support in different way. The simplest possible way basically is like it's about 60% from the red line. Notice that this white line has kind of indicated the bottom of many cycles. Here we were a little bit higher when we had the COVID that actually touched that support line. When we were at $16,000, 4 years ago, we were kind of touching that, and we stay there for quite a bit. So everybody is familiar with what happened. We had the ETF push the price up. Everything seemed very similar to the previous bull run, where in fact I even predicted this was interesting because I was challenged to predict end of the year price for Bitcoin, and I was away from that real price by $400. I say 97, and in fact it was 97,400 at midnight here in San Diego. So everything, and I did that using basically the power law. I didn't guess it. I made a calculation and knew that at the beginning of November, the bull run was supposed to start. I made a good estimate of how far we will be from the bottom, given that we started the bull run, and I got it right. What I didn't foresee was this correction. This was a strange correction because it never happened. Usually when we cross the power law during a bull market, we stay there. Now, this is under the assumption we stay above a red line until we reach a peak. We made a prediction based on the decay from the previous peaks that the top was supposed to be in the 200K. That didn't materialize. And we can do a post-mortem and see why that didn't happen. But the interesting thing is that when we recover from this correction, Then we went back to the power law and noticed many people say, oh, we didn't do anything for 1 year. It's not true. We actually, for the entire year, we follow the power law. We follow the power law growth. It's a slow growth in comparison with what people expected because we were expecting a bull run, and us going to the 200K, but we still went along the power law. So it's a consistent growth, right? If we continue to follow the power law over the long term, we will do uh, close to 10 pair in 8 years and 100 pair in 20. So this is what it's why the model is becoming popular because it's giving people went from being super bullish to be bearish, and actually this give us kind of a sense of direction and maybe even hope, right? Notice what is also interesting, even after we added this correction to the 90s, right? Notice how these several months, let's see what it is. It's from kind of November all the way to January. For all this time, we follow again the power law. Even if we were not on top of a reference line, this line is parallel to it. And notice even this is parallel. So even when we have correction, we tend to continue to grow from that place along the power law. That is really interesting. Um, anyway, so why we didn't have the top that we were expecting? Um, Long time ago, before I kind of settled on the 4 year cycle, I propose that these tops are log periodic. You will have to see the show that we did yesterday. It's called the Physics of Bitcoin that I do with my colleague Stephen Perrenot. And he kind of revisit this theory that um, the bubbles are not periodic, instead they are log periodic. Right? This is a possible hypothesis. There are others. Log periodic means that the distance between the peaks becomes longer and longer. So we were not supposed to have a bubble according to that approach. These, at the end of 25, we are supposed to have a top in 27. You can look at the show. You can look at Stephen work. It's kind of revising and improving what I proposed like 6-7 years ago. That is a possible interpretation, right? The problem is that we don't have a lot of this bubble to make very good predictions. The power law is made of thousands of points. We only have three bubbles, so predicting the bubble has been always a difficult job, right? It is a fact we didn't go in bullish territory, and now it looks like we are in a bearish situation, right? We didn't reach the bottom of this white line. We are here, okay? So we need to understand what is going on, where we are going, etc. So, but I think the big picture remains the same. The power law is still valid because even if we don't follow exactly the red line, the overall trajectory is intact. If you calculate all the parameters like R square, for example, that tell us how good the model is, it's one of the way to calculate it. That number is increasing. Right now we are close to 0.97. That means the power law explains 97% of Bitcoin behavior. So that number is increasing instead of decreasing. But it's some people were really disappointed that we didn't have a bubble. The bubble was supposed to be anyway a factor of only 80% away from the power law, and that put us at 200,000. We reached 126. So anyway, this is mostly what I wanted to say, looking at the power law, and maybe Marcos has some deeper insights looking at liquidity. So I leave the floor to Marcos.
Okay, let me share my screen. All right, let's take a look at the real.
Okay.
What a difference a day makes, right? All right, let's see how we got here. Uh, it's quite obvious that we are in a significant bear phase or bear market. And let's identify how we got here, how low we can go, and how long will we be here. All right. So, really briefly, we're still pretty much attached to this profile of this value area that goes back to we entered in here in 2020, the end of 2024. So all of 2025 and beginning of 2026, we've been in this large range here, this major macro value area, volume profile. So one thing I wanted to clarify here to make pretty clear is when we were in the expectation going to 200K, we were stealthily in what's considered to be a model one distribution right here. This is where the institutions are actually selling their positions off. And while everybody was looking for 200K and 150 and beyond, the institutions were unloading supply here. And it's easier to see in hindsight. This is actually a separate liquidity pool, and this one is separate. There, it kind of looks like one gigantic pool, but it's actually two. And when this one was taken, that was your top, and we had the evidence of that top that even I didn't call. Got caught up in the hype as well, but it was clearly right there. Okay, so then the market likes to rhyme. So I'm just going to draw some consolidation points out right here. We had a consolidation here after a liquidation event. Then we discovered by displacing liquidity and created another consolidation point. Then we displaced again and created about a 100-day consolidation right here. This is a deviation above the macro range. Then we displaced down after another liquidation event, and we created about a 2-month consolidation right here. Then we discovered lower recently, and we took out the last of the major pools, and now we're consolidating here. So the point that I want to make here is this was a deviation outside the macro range here, and we're deviated outside the macro range here. This is the value area low of the range, the value area high. This is fair value. So we're just replicating what we did at the top, at the bottom. So I just want to make that clear. You can see it even clearer when you take off the liquidity. So just to give some context, let me remove that now. So let's drill in and look at the liquidity that we've taken. As you can see, when the market displaces these liquidities, I'm going to just highlight the 5 so we can see it a little clearer. When it displaces these pools, it takes it with serious prejudice, serious vengeance. And then after a major displacement of this massive amount of liquidity in each one of these liquidation pools, we go into a consolidation, these beautiful consolidation patterns. And they last for about 2 to 3 months each time we do that. So we are in one now. So we've removed all of the, there's basically, when you look at the liquidities on the board, we beautifully came and we took out the 3 and 5x combination almost to the dollar. And there's not much liquidity left beyond that. There's just a little bit down here. It starts at about 50 and it ends at about 44. We'll get to that in a minute. We'll come back to that. So this last liquidation event, major liquidation event, we're consolidating. So how long will we be here? We will be here. We'll just measure off the similar one here. This one lasted for about 70 days. So we'll go 70 days from here. We're only about 12 days into it so far, 15 days now. So 70 puts us at about the end of April. So we'll give it a little extra room here. So we'll go, let's go to the end. So about May right here. So we can look to be in this range here till that time. There is a volume profile here. There's a high and a low. So we look to be in this range. Here's the range low. We'll get to that in a second. So then we can look to start moving up as new liquidity comes in. Then we can start looking to move up and move back into this macro range again. There's also a ton of liquidity here as well that's already here. So we can expect to probably start moving in early fall, early to mid fall. Probably getting back to our original fair value of the macro, probably October. So we'll be in this range. We can look to be in this range for a couple of months here. The good news is this is an optimum time to buy. I put some spot orders on right here at 60K. I got some fills there. So you're going to have plenty of time to get those credit card offers, those business cards, get those loans, sell some sell some items, raise some money, because you're going to have plenty of time to be accumulating Bitcoin at low prices. This is as good as it's going to get for quite a while. Give it a year from now, we won't even be. This will be a memory. This is some really good prices. Also, just I wanted to highlight something else here. We're currently in a range from 2024. We've had about a 9-month range that we were in, and we've revisited that range. There's an older profile here, and we're inside of the value area of that profile. There's a fair value that's running in the middle here. So we're inside of this profile. And what tends to happen is when you get in these profiles, you rotate through the profile. So there's a low here that's going to be incoming at some point at about 57K. I'm going to purchase some more spot Bitcoin here at this value area low of this range. And then that may be the bottom, just to go out on a limb and call it. Once we rotate through this range, we're already in it because here's the range high, here's the value area low, point of control. Once we get under this point of control and rotate through the range and come back up and start preparing to move out of here, it's a high probability that we sweep this low down here at 57. That may be the end. That may be all we need to get out of here. This area here, there is some liquidity. If you notice, this liquidity down here is
Can
diminishing.
you lift the screen up a bit, Marcus? Because our faces are hiding. Yeah,
Okay.
just lift it up.
Yeah.
Yeah.
Yeah, this lower level down here, there is some liquidity on the map, but if you notice, it's been diminishing over time. This has been dissipating, but there is some down here. But right now there's no fuel to get here, and then the market, as it ranges, it will build in some liquidity, and we'll have to assess that when we get here. But we've already done 2 consolidations to the downside. The next probable one will be up, not a third one down. So there's a high probability that this level won't be tapped because it's been around for a long time. It was formed in April of 2024, and it's already diminishing. So there's a high probability that we don't have to come down here. The power law is ahead of this level. So if we do, it may be a very brief wick, but the most logical one here is at 57. That's the low I'm looking at. I take it level to level. This is the one that's in play right now. It may be a month from now or a few weeks before we get here, but that's the one. And that's kind of what we're looking at right now is a good golden opportunity to get some Bitcoin at super, super discount prices. It's as good as you're going to see for quite a while, if ever.
So
that is,
just to ask you a question, Marcus, a lot of people are looking at, they're using past drawdown. Maybe this is a question for you and Giovanni. They're looking at past drawdown percentages and all this kind of probabilistic data. But what we're seeing here is the end of the 3x liquidity pool. So the reality is that there's not much fuel to drive this further down unless we build that liquidity, right? So
right.
I guess the question is, and Giovanni as well, is that comparing past drawdowns in the situation we're in is maybe just as silly as sort of, we predicted tops that didn't happen based on past history. It's predicting the bottoms 30K, 20K based on past history, just the same. Well, we really should be looking at the reality, which is this liquidity. Just wondering what.
Well, no, okay. The tops, I always said, right? People want to listen just partially what we have said so many times. We're not saying these things based on sentiment. We're saying these things based on math. We always say it very clearly that the tops is a difficult business for different reasons, right? One, we have only 3 of them. So if you want to do statistics on three, you can. I always say, in theory, you can. You have three events, right? Imagine somebody knocks on your door 5 o'clock every day. It happens the first time, it's random. Second time, three times, it becomes a pattern, right? Now, is it a statistically strong pattern? No, because you need hundreds of events like that, right? But these are all what we had. So if you wanted to say, well, are we expecting another bubble after this particular period, etc., you can try to make a guess. We did. There was also a decay of these peaks, right? They went down in a precise fashion, and that is actually creating some kind of a limit of how big the bubble was. I always discuss it as a limit. It actually was a warning to people that claim, oh, Bitcoin will reach 500,000. I remember somebody was prophetizing 444K, becomes like a meme. And I was saying, no, it doesn't seem likely, right? At most, we go to 100K. People didn't understand it like that. It was no a guarantee that we will go there. It was, if we go anywhere, at most we go to 100K. That is all what we could do. So it's, even if these things didn't come up exactly like we predicted, we had all this warning from the beginning that these were rough guesses, were an attempt to make sense of what was going on. Now, we did have a peak in October, but more or less where people were saying we were going to have a peak. It was 126. Now, the bottom, we always say the bottom is a completely different type of behavior, and there is stats to prove it. You can show that we never crossed that line, for example. You can talk about how it is associated with the energy cost. There is for example, one of the things you can do, you can take hash rate and make a model that is a power law model of price based on hash rate, and you get more or less the bottom, what we call the bottom. So that place has a different significance and different meaning than the tops. And it also makes sense because bottoms are much more predictable. Like the market is exhausted. There is a problem with the cost of production of miners don't want to sell when they are at a loss, so it's really, if you understand it, the significance of a bottom is a completely different business, and this is why it stays a point of reference, and is a very strong point of reference. Now, it's possible that when we look at liquidity chart, they give us more information. There is a confirmation that yes, that bottom is meaningful too, even from a liquidity point of view. Do you see any evidence, for example, that it seemed like you were confirming, right, that there is not much liquidity below 60K, right? This is what you were saying,
Yep.
Marcus?
Yeah, there's not much there. There's no fuel to go lower right now.
Yeah. So it's
We'll have to-
there is a convergence of signals, right? That is a good thing because you never want to stick to one signal. You want to look at many different things. This is why the liquidity chart is nice when it aligns with some of the power law predictions.
Right.
Does it answer your question, Costa? Or your
Yeah,
observation?
it does. And sorry, my camera's playing up to that. Oh, there we go. What I'm saying is on the BitBo power law, which is the one inspired by yourself, the bottom is marked at 57K exactly on that one as the power law support, which is interesting.
Well, it's nice that there are these resources. I will say to people not to use things that are not sponsored by us, right? Because people can do their own calculation, verification, but there is a reason why, we don't have a, let's say, like a hold on math, but we do a lot of work to make sure of it. The calculations are precise and supported and so on. So we have these indicators, people can subscribe to the official indicators that we are producing. I can put like a link where people can find them. Eventually, we are working also this initiative that I announced it in my other channels. It's called the Scientific Bitcoin Institute, and it will be a place where not just me but other people will work on the power law, and we'll create all kind of resources, and eventually we will have a chart that we can say is the official power law chart, but it's a work in progress right now. But yes, roughly the support is there, right? Is for example, my chart indicates that we are talking about 55. This is where the support is right now, about 55, roughly. Yeah. Sebastian, what about our algorithm, our Minotaur algorithm? What can you say about that? How did it handle this craziness in the market in recent times?
Yeah, and first of all, good to be back, everyone. I want to show everyone, I guess, where we're kind of at, and then I'll go through a couple different time frames of how we traded also, because I think this is important to show. So let me just share my screen, and let me know when everyone can see. Can everyone see?
Yep.
Perfect. So welcome to the show. For anyone that is joining for the first time, my name's Sebastian. I'm the CTO over at Minotaur. And basically what I want to be showing you guys is we have an algorithmic tool. And the important point here is it can be run on a number of different time frames. So depending on how you run this tool, it can be completely customizable by the user. And you can customize it in such a way where it does things like scalping, swing trading, dollar cost averaging, and you can also configure it to trade based on the actual power law support and on the liquidity model. So what's important to understand, depending on how you run our algorithm, it has a number of different pathways on how it can trade. Now, an important point about this is, unlike any other system, well, sometimes akin to other systems, the time frame can vastly change how it trades. And typically with our system, since it produces alpha generating signals, what you tend to have is less alpha, but more frequency and more trading on a 1 minute, 3 minute, 5 minute, or a 15-minute time frame. And as you go up to the higher time frames, what you get is less frequency, but higher alpha generation. So this is something really that you can kind of think of it like a Swiss Army knife. That can be a toolkit for you to go out and really work on the functions inside it to kind of build it how you want it to run. So I want to kind of show a point today of, first of all, where we're at when it comes to the 15-minute time frame. And just so everyone's aware, if we come back, we can kind of take a look that we were running our trades here and we kind of closed our last position at 115K, so very close to the top. I want to show an important point that on the 15-minute time frame, we nearly bought the tip of the market. So I think it's important to show this because we want to be transparent about the system and how it works and the fact that it's not perfect, right? And in certain ways, it can either be trend following, depending on how you set up the take profit configurations, or it can also be something that takes profit very, very quickly. In this scenario, one of the algorithms I'm running aims to trend follow and capture large profits. Now, one of the downsides to this is sometimes it can catch the tip of the market. But what I want to show you guys, one, is why that's not the end of the world. And two, kind of what this situation looks like when you go through mass market sell-offs. So what I want to show is that first, the algorithm made its first buy at 115K. So very, very close to the tip of 126K. So this was not a great buy, right? Not a great buy, considering what's happened with the market. But the point is that it doesn't have to be a perfect buy, because when you structure the algorithm to layer your capital efficiently over time, what it means is that it can be very, very forgiving. Now, if you're a traditional trader who puts his assets into the market and goes long, that's an unforgiving strategy because you have to get the first buy perfect for you to be able to be profitable, right? What we love about DCA and why this is a strategy used by so many funds and so many traders and institutions is that one, it's forgiving on where you place your buys, but two, you have the ability to invest into the asset and lower your weighted average price as the market falls. So you got to notice two lines here. One is the green line. This is your take profit, which is in this case a trailing percentage above the weighted average price. The orange line here is the weighted average price. And what you're going to notice with the algorithm is it slowly dollar cost average down as the market falls. And you're going to see the market get very, very aggressive here with its selling pressure. And as we can see, we continue to go and we continue to go. Now, important point, this dollar cost average from $115 to $1,000 on Bitcoin. And we just recently made a buy on around the 6th of February. So not too long ago, start of this month. And that purchase was placed at 60K. So let me put that into perspective. Most traders that were long and not short in this market lost everything and were completely liquidated. Not just traders. Also recently, there was some pretty crazy behavior going on with block fills. I don't know if anyone's been paying attention to that, but institutions have gotten exploded on this move down. So don't get it twisted that it's just retail traders losing. That's not the case. Large scale traders and institutions have lost as well. The point is that although we've been in this trade for an extended period of time, there's no doubt about that. And although we are in drawdown, yes, there's no doubt about that. There's 2 points I want to bring up though. What's more important than anything else is one, liquidation risk, two, capital preservation. So if we can prevent liquidation and we can put ourselves in a position to exit the market on a recovery, being in drawdown is not really a problem. The problem is when you lose your portfolio. So if we actually look at where we're at right now, as we can see, our weighted average price is sitting at around $73,000. Now, that is a ways away from 67, but it's actually only about a 10% move. So the point I want to make to you guys is the algorithm made a bad buy at the start of the cycle, but because of its infrastructure and the way that it cost averages down, that bad buy all of a sudden turned into a purchase that is now sitting at $73,000. Now, if the market can recover from here, and there's no guarantee, we could go down to power law support. That's the reality. But I'm very confident we're not going below power law support. And if it does happen, it's something that won't happen for long. That's what the historical data tells us. So I think it's important to, when this sort of stuff is happening in the market, and I know Giovanni, Marcus, Costa can talk about this. I've been in this market for over a decade. I couldn't tell you guys how many times they say Bitcoin is dead. It's over. Bitcoin is dead. I saw something the other day trending that there's more Bitcoin is dead quotation marks on Twitter than there's ever been before. And this isn't something that changes. So when you enter this market, regardless of whether you have conviction or not, you cannot be fickle and you have to have confidence in what you're doing. And the reality is on the 15-minute time frame for us, we're in drawdown, but on these settings, we're only about a 10% move from our average price and potentially a 15% move from taking profit. Now, here's what's important. This is a setting we run, but this is a tool, right? We're not a hedge fund, and we give clients the ability to set this up and run it how they want. Now, if we go ahead and change this to a 2-hour time frame, remember how earlier I said what we're doing by doing this is we're giving away how often it trades to increase the alpha of the signals. I want to show you guys something. On a 2-hour time frame, although it was not producing as many trades, right, we've actually traded active this whole time. So we took our last profit at 96K and we've traded all the way down to where we are now, 66, weighted average price of 71 with a take profit of 75. So the point is, this is a tool that can be construed in a number of different ways, and depending on your risk profile, how you want to run it, there doesn't have to be liquidation risk. It can be run in a safe way. Or if you're someone that likes to take a bit of risk, it can be constructed like that as well. But it's just about understanding this is systematic trading, regardless of the market direction. And it puts you in a position to be able to exit in a profit, much better than spot buying the top of the market, and far greater than investing your portfolio and putting a stop loss on. So that's kind of where we're at, and I just wanted to show everyone the system.
Very good.
Great job.
Awesome.
think you're on mute.
Okay, very good. Costa, do you want to add something or?
Yeah, my browser's playing up, so I can't share and I can't share my video. But I just wanted to say that the Minotaur algorithm has really proved itself as a hedge against a price crash, as a hedge against these massive drawdowns. At the end of the day, a lot of our clients, especially the ones that have come from Giovanni, are using Bitcoin as collateral, right? They want to acquire more Bitcoin. So you're already exposed to 100% of the price going up. The Minotaur algorithm shouldn't be about making more money when the price goes up. It should be about making money when the price goes down to give you the ability to buy more Bitcoin at lower prices. And we've really started to understand that that's one of the biggest strengths that we have is to just focus on where the price can go during a crash. How do we take advantage of a 10% pullback, a 20, 30, 50, 60, 70% pullback? Not how do we make more money when it's going up. We're already making money. We're all Bitcoiners, right? We don't need to do that. What we need to do is we need to take advantage when the market goes down. And you can see from what Sebastian said, sometimes just adjusting the time frame, setting it to a 2 hour instead of a 15-minute, is just going to allow you to be better positioned when those crashes happen. And I think everyone's been humbled this particular cycle because at any given point, it looks like that power law support is a really strong magnet. And it can happen at any time, regardless of where we are in a cycle, if it exists. So I think the Minotaur product is a fantastic way to have defensive exposure to this kind of activity for Bitcoin.
Yeah, so I want to add something about that, right? So whenever I suggested people to actually use this tool, that is a tool I use myself, I always said, think about this tool as a tool to increase your holding of Bitcoin. Because the idea, I actually have a term for this. I call it HODL plus. And what do I mean with that? Your Bitcoin is sitting somewhere, right? Many people suggest to have your Bitcoin in a cold wallet. That is a very good advice, etc. The problem with that is your Bitcoin is sitting there. And, it was different 10 years ago. We expected Bitcoin, and that is one of the consequences of the power law, to go up 70%, 80%, right? Depends how close you are to the beginning. With time, we have diminishing return. And it is not just a diminishing return of the peaks, it's a diminishing returns period of Bitcoin. Right now, if you use the power law, we're talking about annual returns of around 40%. These returns are going to go down all the way to 25%. It will take 20 years to go there, and it's still amazing that you can do these returns, but we're not talking about 2 pair anymore. Now, if you are able to use whatever method, and I'm even talking about options, for example, because it's a complete free method, it doesn't cost you anything if you learn how to do it. And I'm making videos to explain how to do that because I don't care. I'm neutral. You can use this tool or you can do it yourself doing options. But if you do even something as small as, let's say, 2% a month on top of your Bitcoin, or even 1% with option, it's very easy to achieve. You can do it with options on Bitcoin. You can do it with IBIT if you want to buy some of the ETFs. 1% a month is 3 times your Bitcoin in 10 years. So if you have a long time horizon, that is what you have if you are a Bitcoiner, and 10 years is long, but it's not a lifetime. It's a relatively short amount of time. You can multiply your Bitcoin by 3 pair. If you have 2%, we are talking about 10 pair. Okay. So imagine you're multiplying. So you start with 1 Bitcoin and you are going to have 10 Bitcoin in 10 years. According to the power law, we are talking about 15 pair the value of today. So that means a total of 150 pair. So nothing is guaranteed. I'm not telling you this is exactly what is going to happen, but this is what the math shows. So if you have any tool that can give you some small, consistent yield on Bitcoin, that is what you should focus on. That is like a gift, and this tool that the Minotaur team created can do that. But don't focus on getting big returns. Focus on very small, consistent returns and making sure that your liquidation levels are basically nothing. Like I set it up in that way. I didn't care about making 5%, 10%. I was talking with some people that told me, oh, I discussed with the Minotaur team. I told them to push the machine so fast where I'm making 10% a month. I was very scared about that. I told everybody, don't do that. I had a personal friend that he was insisting to do that. And I was telling him every single time, focus on preserving your capital, focus on preserving your capital, focus on preserving your capital. And this tool can do that, right? It's like you have a car, you can drive at the speed limit and go wherever you want. And then you can go 200 miles an hour, have a rush, and go in a canyon, Don't do that. Drive safely. So that is my advice. And if you focus on that, this tool will be a powerful tool for you. That is how I see it. I don't know if you guys have to say anything about this, but this is my philosophy about using this type of tools.
Yeah, it's. I think the point is Giovanni's made it time and time again. You can achieve 1.5% without any liquidation risk. And if 1.5% a month means you turn 1 Bitcoin into 10 Bitcoin in 10 years, you have to ask yourself, is it actually worth taking any risk at all? That's the kind of way I think about that. And there's the answer, guys. And tell me another way you can take 1 Bitcoin and turn it into 10. If you want to do it through mining, you're going to need to go and buy a warehouse somewhere and probably invest about $2 million. Good luck with that.
Right.
Yeah.
Anyway, guys, if you are interested in more in the details and how to join this particular program, you have a link there. You can also contact me directly on my X account, and I can put you in touch with the team, and you can start to test it. But yeah, there is a link there below that you can use. We will have also some webinars soon, and I will announce them in my X account. We will try to have these webinars every month, and we can go more in depth and answer all kind of questions that you may have. Okay, maybe we can address some of these questions. Quantum computing. A better place to ask these kind of questions is our Physics of Bitcoin show that we have on Wednesday. If you look at, and you can go on, I don't know if are you on YouTube? Yes. So go on my web series, right, that you can find, and look for episode number 5. There is an entire show, episode number 5, dedicated to quantum computers. And there's a presentation by Steve that is a physicist, so it's probably the best type of people that you want to ask this question. And he's not just a physicist because we specialize in different topics. He actually worked on computation, so he's an expert on this topic. And to summarize, he say that it's not a problem. We have countermeasures for them. We will implement these countermeasures before quantum computing becomes a threat. But go and watch that episode number 5. Okay. Okay. I don't know who's you guys know who is Sandler? I don't know who's this guy is.
I may be talking about Adam Sandler.
Adam Sandler.
I've got no idea.
No, I don't know. Okay, is the value of a white line, and we say around 56, 55. This comment here, institutions are hedging and take profit. They don't wait until the price goes high to take profits. Right, and this could explain why we didn't have a blow off top, right? Now, why did we have a very rapid change downwards? I think it has to do with leveraging and some games that institution play exactly because we have a lot of paper Bitcoin right now. But it could be also an opportunity because in theory, if you have an algorithm that can react to these big changes, then maybe you can position yourself and buy low. So this is one of the things to consider. I don't know if you guys want to say something about that.
Yeah. Institutions are there's different types of commercial traders. You know, the futures market is where price discovery happens because there's where the leverage is at. The leverage is where the bubbles take place first, and spot catches up to parity with leverage. And they're commercial traders that buy futures to protect future prices for their businesses. Their ratio there's proprietary desk commercial traders that buy low and sell high, and it takes a long time. Sometimes those institutions are on longer term time frames, and it takes a long time for those institutions to round trip their portfolios. So when you're moving billions of dollars, it could take a year or 9 months, 6 months. So there's that. And then there's basis trading, traders that are hedging and taking advantage of fees and interest rates and the cost of holding positions. So there's all that going on at the same time. One thing I wanted to make clear is most individuals tend to buy high and not and sell low. So they do it totally opposite of what institutions do. So just my 2 cents on that.
Good. All right. Let's see. What is the next question? This was, I don't know, the faces of a panel are blocking the lower fifth of the screen. Yeah, next time we can take off the faces.
Yeah.
You don't need to see our faces all the time. It was me that I was not directing the show.
Yeah, I didn't
There
notice
are
that.
ways
Yeah.
of moving the faces all over the place, or even not having faces.
Yeah, we'll get that.
Thank you
We'll get
for
that.
the support, the moral support. Yeah, so in theory, so if you believe a cycle theory, usually we top on the fourth year after the halving, right? So it should have been October, November, December, and then it takes 1 year to go to the bottom. But things move very quickly. We are much closer to the bottom to where we are supposed to be. So I think something happened. The overall picture is the same. The cycle structure probably is different. We need more data. I say we need more data to understand. Is this theory of a log periodic bubble correct? We don't know. If we have a peak in 27, it will confirm the log periodic theory. So I'm not sure if we have the same references that we had before. Things seem to be different. Okay, Caspa, no, it's not a power law anymore. It was for a short period of time. I warned everybody that it was interesting, but it didn't last. There is too much until October. I believe Bitcoin can easily go to 40, 45K area. It can go anything. We right now the data that we have is that bottom, that power law bottom, is a very interesting point of reference that has never been violated. Is something written in stone? No, right? But when you say I believe, I usually don't trust people that say I believe this, my feelings is, because we are trying to use data, right? And yes, it's a difficult business. It's better to make a bad prediction using data than guessing right with no method, because I don't know if your guess was just luck. At least I tell you how I arrived to that conclusion. This is my method. This is my starting point. These are how I go there, And you can, in science, you can say, well, I don't like your starting point. I would like this starting point instead. And you explain logically why that starting point is better than this other. If something goes wrong, then you go back and you recalculate, or you see where your assumption were wrong. If you say, I believe this is why 99% of influencer online, on Twitter and so on, they use their feelings. They don't explain how they arrive to some analysis, or they use methods that are kind of ridiculous, like joining by hand a couple of uh, points and say, oh, this is a support line. That is kind of done by guessing. They draw something, it looks like logical because we are a pattern seekers, and they show, oh, here the receiver is a pattern, but it's a bullshit pattern. So this is why I prefer to be wrong using math, because I can go back and see where I went wrong. What where I did my assumption were wrong, my method was wrong. I can always check it back, right? This is how you do it. This is how you learn. You go back and forth in an iterative manner. But saying, I believe, okay, explain me believed on what? Just feelings, That is my problem with that, okay? Top matches, no, because if you can look at all the bubbles before this and come up with a logical model, that is what we did, very periodic bubbles every 4 years. You can calculate a decay that is reliable. But the point, like I say, that is different from the power law, and this is one of the things that people don't understand.
That not to cut you off, Giovanni, that's the same type of mentality that gets you in trouble on the tops.
Yeah.
These are retail mentalities. I believe it can easily, they use words like, I believe it can easily go.
Yeah, exactly.
Easily based on what? There's no, right now, currently, there's no liquidity to take you there.
Yeah.
It's going to take time structurally. And here's the thing that gets you off cycle. This type of belief is going to go lower, makes you wait, it makes you sell, it makes you hesitate. And this market is slowly building strength. And what's going to happen is you're going to miss the move more than likely, just like you missed the top. Oh, I believe it's going to go up, but it's actually going to go down. And now it's got everybody thinking it's going to go to 0. It's going to go to 40. It's going to go down, down, down. And it's slowly building strength to make a face melting move up.
Right.
And you're going to be in the wrong position again on the downside. That's what markets do to retail mentalities.
Yeah. And, we are not trying to pile on you.
No.
We are just saying
this
is our approach. This is what is the difference between what we are doing and what other people are doing. We are not using feelings here. We are trying to minimize feelings. I don't know. I didn't see much liquidity, and it could be some liquidity there, but it depends how strong the liquidity is. It can form a wall. Marcus is more of an expert in this. And
there's liquidity everywhere. There's always some liquidity, and there's gonna in the market. The chart will never take it all. It's going to be some left behind. You can't take it all in either direction, but there's not much to get us there.
Now, about the slope, this is also not true. So you can calculate, and it's not just me, other people have shown this graph. You can calculate the slope, adding more and more data. You don't want to take just a small amount of data. You want to do it from the beginning. And you calculate the slope, adding more and more data, and you see actually how it stabilizes. It stabilizes and it doesn't change. And the R square also increases. So the power law is becoming stronger, not weaker, and the slope is stabilizing. You have to do it in the correct way. You cannot just take the most recent data back to a certain value, because the entire idea about the power law, that is a scaling phenomena. So you want to include all the scales from the origin. Otherwise, you're not discussing the power law. And the power law slope is becoming more stable. I did other things. Go on my recent post, I discussed this thing that I call the daily slope. So I basically look at the change in price, and then I normalize it by the decay that is supposed to be there. And then you get this stable quantity that is what I call daily slope. It's a slope. And that slope is oscillating, but oscillating around a stable value. And even the distribution of this value of a slope is consistent in time, and you can do different tests. I discussed this in the last few posts. Maybe I should do a video discussing this, but it's one of the most, it's basically a test to show how stable the power law is. The power law is extremely stable. It's becoming more stable with time. Okay, Bitcoin will do a max of 300 from bottom to top for the next cycle. 300% is actually a lot, right? We were supposed to go 80% from bottom, you're saying. I don't know. Again, I don't know where you're taking this number. I would like to see a calculation where you're showing this. We could use that decay. I don't trust that decay anymore because it didn't materialize this time. I think probably we're not going to see big bubbles in general. If maybe we go back to reference line, and maybe we do exactly what we did this time. We go all maybe 20% above it, 10% above it. I don't think we are going to see even 2 pair from the reference line. I will be surprised.
And I just want to throw out there, you got to be careful with a performance-driven mentality. Everybody wants to get returns, 300%. I want 10x more. That is the exact mentality that's going to get you to lose your money. It's just like going to the casino. I want to make my rent. I want to make money. When you go in there with a make money attitude, you lose sight of how much risk you're taking to try to achieve those results. And you lose sight of the risk. It's all based on defense first. How much am I risking? What do I stand to lose? And if you can just maintain that, like Sebastian was saying earlier, and Giovanni can attest to this, if you can protect your base, the magic is not in the return or the profit. The magic is in the compounding. It's what it does over time as it begins to stack up. The base works for you.
Exactly.
So watch that mentality.
This isn't a short-term market. This isn't a short-term market. I always like to use this point, but it's like, you shouldn't be coming into this market for a monthly rental income. You should be coming into this market for long-term wealth generation. The faster you shift your mindset to that, the faster you have success. And trust me, there is no such thing that makes you rich overnight. It doesn't exist, right? So don't get trapped into that.
Yeah. Because if you lose your base, then you're out of the game. You can't do anything.
Yes, this is a good point. Yeah. If you guys give me your so Marcus has a Twitter page. I can add it. Marcus, if you don't mind, write it down for me, your handle. Then I will add it to the description of the video. What about you, Sebastian? Do you have
I don't really use X. All I use X for is to follow your post, Giovanni. I don't have any followers.
Okay. And Minotaur is in the Costa as a Minotaur system account that you can subscribe to. You can follow. But I will add it to the description. It's a good.
It's my name is my handle. My name is my handle. It's on my name.
So Marcus,
But
and maybe we can stop here. I didn't say that I'm expecting the bottom now. I'm expecting the bottom line. That line is respected, and if we touch it, that is the bottom, or at least a local bottom. Now it could be that we stay there for a long time. Usually, these bottom are extreme position. So, for example, one of the charts that I didn't show you, maybe we can discuss next episode, is this chart where I identify these regions. There is a region I call the core power law. Usually these during bear market, we spend 2 years in this core region, and it treats both, even the reference line is treated as an extreme value. In the past, we didn't spend a lot of time, beside last year, where we moved along that reference time. Usually was a crossing point. We were in the core region, or we were in this turbulent region that was above the power law. And the bottom is an extreme value, where if we touch it, then we spend just few days there, and then we go back to this core level. So it's possible that we touch it, we go to the core level, maybe again we touch it again. But remember, the bottom in November is going to be different than the bottom now, right? It's going to be more, if I remember well, because people, under the old assumption, we were supposed to go to 100K. It was supposed to take 1 year. So from November to November, you're right. Usually the bottom was in November of the following year after we reach the top. And I remember by heart that value was around 70K. So even if we have a bottom in November, it will be 70K. So basically we are not going anywhere. We are moving sideways, for almost 1 year. Or maybe we go a little bit higher, then we go back there, But I don't know. The only thing I'm saying is that I'm not sure if the regularities that we saw before about the cycles, they were pretty regular. You can superimpose. I did that. I superimposed the previous cycles, and they were almost identical, But I'm not sure we are following that pattern anymore. So this is what I'm saying. We need more data to understand what is going on. If we are in a different regime, my assumption is that the overall power law is still valid, because it's a long-term trajectory. The cycles are disrupted somehow. There are some similarity, but also a lot of differences. So we are learning as we are going. That is my approach right now. Anyway, guys, thank you for your questions. They're all very nice. And thank you for engaging with us. We will be here next Thursday again. Okay? Thank you, everybody.